If you're looking to move to Florida anytime in the next year, I have a conversation that you have to listen to. Today, I'm going to be talking with one of my very favorite lenders on a couple of topics that are going to be critical for your purchase, and 3 areas that you need to focus on right now to get yourself ready for that purchase. Stay tuned. Jorey, thanks so much, man, for joining me today. I appreciate it. How long have you been doing mortgages?
I've been in the mortgage industry for 9 years now.
9 years?
Yeah, man, it's been quite a ride.
What are some things that people moving to Florida should be, maybe if they're about 6 to 12 months out from buying a home in Florida, what are some things they should be thinking about right now as they prepare for that?
A lot of people don't take into consideration what is their employment and how is that going to be. One of the big questions that I like to ask when I'm prepping someone for that move is, what is your current status of employment? How do you get paid currently? And then what is the new job, or what is the goal for when you get here? People don't take into consideration the fact that you can't use employment from where you're from. You have to use it from where you're going. How could you pay that mortgage when you've already left that employer? So that's one of the big questions that we have to hone in on, and that's one of the big things that people have to get figured out before they come to Florida is, what is my new job, or can I bring that job with me?
So if they're not bringing the job with them, how would they qualify for a loan in a new state?
So one of the things that that we look at when you're getting a new job in Florida is that if you're able to be transferred, right? You can be a transfer. All you need is a transfer letter from your former employer. But if you're getting a new job, that new job, all they require is they just require an offer letter that basically lays out what your new employment's going to be, such as your hours, your new income, full-time, part-time, whatever it may be, and when your start date is. Or if you start the job prior to your closing of your new property, we just need a new pay stub. That's all it is. Very clean and simple.
So a lot of people now are self-employed or they work from home. Does that factor into the equation, or what's different about that?
Very similar to being a regular employee. If your business is brick and mortar in the location of where you're at, the bank is going to question, how are you going to maintain the success of your business from out of state? The likelihood of you utilizing that self-employment, if it's a brick and mortar and it's not an online basis, is very low.
So if somebody starts the process with you, what do they need? Like, what kind of information do they need to give you to start qualifying for a loan?
Yeah, so initially on the initial conversation, what we're really looking for is we're looking to break down where is someone's income, what is their credit score, and what type of credit profile do they have. And we're also looking to see what type of assets can they utilize for this purchase. A lot of people, when we initially talk to them, they're getting a lot of information from outside sources, whether it's parents, family members, online. I mean, even Zillow. If you look at Zillow, when it provides you a breakdown of a monthly payment, it's always immediately giving you 20% with a 780 credit score. And that's just not everybody.
Making a lot of assumptions there.
100%. So when we're looking at when we're asking these questions of what do we need to be able to qualify, we're really looking at just what are the basic assets, what is the basic credit score, and what are the basic incomes.
Do you find a lot of buyers using gifts as part of their down payment?
Yeah. I would say it's about a 45 to 50-50 split.
That's pretty significant.
Yeah, no, it's a pretty significant figure. The way that I look at it is that, we look at it from a perspective of where the purchase prices are now today. Even back when I started, there was still a purchase price level of where parents were able to help their kids out, family members were able to help. So gifts are a phenomenal source. And to be honest, some people may not want to ask. That may be an ego thing, but parents are really, really wanting to help their kids get into a property. And it's not even that much. Minimum of 3% down on a purchase, 3.5% down on a purchase. It's not a massive amount.
Just to be super clear, a gift is basically money that a family member is giving to a buyer to help them get into the property, correct?
Correct. That is 100% correct.
I think everybody right now wants to get the best interest rate that they can get. Now, there are some things that a home buyer can do to get a more attractive interest rate. What would you suggest for that?
Yeah, let's face it, interest rates suck right now. Right? And so a lot of the questions that I'm getting right now is, how can I absolutely get the best interest rate possible? And, we're not going to beat the market. So rates in general are high. Now, there are some pretty cool programs called some people have heard of them, but they're the 1-0 buy downs, the 2-0 buy downs, 3-2-1 buy downs. And essentially what that is, it's an opportunity to take money that a seller gives you, which is called a seller concession, and you can negotiate that into your contract. And when you take that concession, you can apply that figure to the interest rates to get you, whether it's 1 whole percentage point down, 2 whole percentage points down, or 3 whole percentage points down. The reason why—
And do those stay forever?
They do not.
Okay.
So the way that it works is, say that your base interest rate is a 7.5%. If you did a 2-1 buy down and the seller gave you those concessions, the interest rate for the first year would be a 5.5. The following year would be a 6.5, and the third and terminal year would be a 7.5.
One of the big issues in Florida real estate is insurance. Now, have you seen that impacting buyers' ability to purchase particular types of property, and if so, how?
Yeah. So insurance has become a pretty big thing in Florida. When I started 9 years ago, your average insurance policy was about $1,200.
Oh my gosh.
Yeah. It's,
what is it right now?
about $4,500.
Oh my gosh.
Yeah. So
That's so crazy.
insurance in Florida has gotten pretty ridiculous. But a lot of things that you're seeing now is that most insurance companies, they're not accepting anything from roofs that are 5 years old or older. They're not
5 years old?
5 years old or older.
My gosh.
You have
on a 30-year roof.
On a 30-year roof.
Okay.
Yeah.
Make that make sense. Make it make sense.
So you have to, when you're getting these buyers, you have to prep them. So again, a lot of out-of-state banks, they will provide a client with a worksheet that shows like $100 a month insurance policy. Absolutely
Not all
incorrect.
accurate, yeah.
Right. And so they don't know anything about the properties. They don't know anything about the condition. And so that really changes. Say you have a buyer that's very on the cusp of qualifying, and that insurance policy goes from $100 to $300 a month. Well, they fell in love with that house, but now they can't buy it.
Yeah.
And so that's the type of stuff that people need to be aware of, is that insurance in Florida can be expensive. The condition of the home matters, and your inspections are extremely important to take care of in the very beginning to figure out what your insurance is going to be.
And that's one of those things, when I'm working with a buyer on a property, I really coach them during that initial inspection or due diligence period, that we're doing the inspection right away as soon as possible so that we have those results. And not only are we doing that, but we're also shopping insurance from the jump.
Yes.
So a lot of lenders will wait a little bit too late in the process, in my opinion. It's better to know up front if the home is insurable, number one, and number two, what that rate is going to be, because that can make or break it for a buyer, especially if they're flirting with the top of their budget. A super high insurance premium could kick them over the edge.
100%.
And I think you also make a really good point why it's so important that you work with a local lender. So you can work with a lender from any state, really, that as long as they're licensed in the state of Florida. But if they're not seasoned and experienced in the state and understanding what's happening today in the market, because just in a few short years, you've seen those insurance premiums effectively quadruple almost. I'm not that good at math, but don't check me, but close enough, right? A significant increase. So if you have somebody who's not current and active in the market, they could very seriously be setting you up as a buyer for really disappointment and a failed transaction.
That's 100% correct.
All right, so someone that's looking to move to Florida in the next 6 to 12 months, what are 3 things that they should be doing right now from a financial standpoint to get ready for that move?
So somebody that's looking to move in the next 6 to 12 months should definitely be looking at their credit profile. One of the places that I recommend to look at is myfico.com. You can pay $30 a month and check your mortgage score. It is 100% accurate.
Really?
It's 100% accurate. Credit Karma does a ballpark job. So what I mean by that is if it tells you you're at 700, you very well may be anywhere from 670 to 730. Now, 9 times out of 10, you're on the lower end of that. And so it doesn't help you prepare for getting financing when you don't really know where your score is at and what your credit profile is going to look like. So myfico.com, you can pick up the $30 a month option. It has a My Mortgage score. I highly recommend it because it's going to get you prepared and ready to go. The second thing that I would really look at and really being prepared for is look at what you're currently doing for employment. Are you an hourly employee? Are you salary? Are you commission? How long have you been in those roles? And then does your job allow you to work remote, or will you need to be getting a new job? Now, those questions that you can ask yourself, it will really change the outcome of when you move to Florida. Finally, is going to be your assets. Get everything in line. Figure out what assets you have set aside, whether it's savings, checking, 401k, investments, even gifts, as we talked about. Any direct relative can give you a gift. And it's very easy to receive this stuff. You just have to have the conversation. 9 times out of 10, family is willing to give you the money.
So number one, know and track your credit. 2, understand your employment situation, how that's going to be in the new property. And 3, get your assets together and understand all of your money, where it's coming from, what you have, and what you need.
Correct.
Right? And number 4, you probably should talk to an amazing local lender to get your ducks in a row and get you ready for that move.
100%.
So if any of our viewers are interested in moving to Florida and they would like to hire the best lender in the entire state to secure their loan, how would they get in touch with you?
You can reach out to my office, Mid-Florida Mortgage Professionals, and the number would be 321-296-8218. My name is Jorey Blackmer. Or you can hit me up on Instagram at _Jorey Blackmer. It's pretty simple.
Never would have guessed it. Thanks, man. Appreciate it.
No worries, Chad.
My name is Chad. Thank you so much for watching today. If you have any questions about buying, investing, or selling real estate here in Central Florida, please feel free to reach out. Make sure you subscribe or watch one of these videos right now. See you next time.